Hi friends, taking part in a stock market is as tricky as anything else in this world. Indian stock markets witnessed unprecedented highs during the last 5 to 10 years. It was on the 24th September 2021. The stock market index Sensex touched its ever-time high of 60,048. Where is this market heading to? The Nifty crosses 17,800. Everyone says the market is moving up. Everybody says it's a bull market. But is there anything really something which is to be worried about when the bull is on the run? Let's have some fact checks here. Friends, it took just 166 trading days for the Sensex to reach 60,000 from the 50,000 levels. The markets had an unprecedented run. Remember, in 1990, the market's benchmark index of the NSE was 1,000 points. It took 3,652 trading days for benchmark index of the Indian stock market to reach 10,000 levels. An unprecedented bear market happened for almost 14 years. Then 1,820 days for the 30,000. From there, 432 trading days to reach the 20,000 levels. After that, 1,820 days for 30,000 and the 40,000 reached in just 1,042 trading days. But the surprise happened after that. 415 trading days to reach the 50,000 and 166 trading days for the 60,000. What a fabulous bull run. Everyone is making money as it seems. But will the bull run end in Indian stock market? Looking back, on May 16th, 2014, there was a political twist in Indian political scenario as the Prime Minister Narendra Modi took over as the Indian Prime Minister. He won the elections in 2014, May 16th. And it was on the same day the Sensex touched 25,000 for the first time. And again, on March 14, 2015, the indices touched 30,000 because the Reserve Bank of India cut the repo rates. Again, in January 17, 2018, the bull run continued to 35,000. We see the second coming of Narendra Modi in 2019, May 23, when the index were at 40,000. And again, from 2020 to 2021, 1 year, it was 60,000 now. Where is the market heading to? 70,000? 1 lakh? Every prediction is going on when the bull is on the run. Now, let us see some facts here. The technical facts, the historical facts and the global market scenario. Should there be a bear market? Will the market go down? And how far the market go down from here? And for whom I should speak all this? This is going to be a long video, so I believe the videos has to be shortened. And for your convenience, we have decided that the videos will be of 3 episodes. And the first one, we will deal with the technicals of the market. And I believe the market and the market sentiments have to be told to someone who is so inexperienced in the market. When I say inexperienced in the market, I have to see some of the data of the Central Depository Services India Limited, the CSDL and the NSDL data is something which shows the staggering figures of the new demat accounts in India. The demat accounts in India in 2016-17 was 1.23 crores and it touched an ever-time high of 3.34 crores, which means almost 2 crores of new demat accounts in India who have never seen a bear market. They have only seen the market going up, going up, going up. And when the market goes up, everyone makes money. And some of the factors which we have to see in this, because we have to closely look up what is happening here. And some factors is of the market going up is the COVID vaccination drive, which is happening. Almost 84 crores of Indians have been vaccinated. The redemption in business activities, the positive global cues, the US market is going up, and many other markets. The strong corporate results and the expectations of a rapid economic recovery in India is being the talk of the town. And again, the sustained foreign inflows, the foreign fund investment, the FPI, the foreign portfolio investment has touched 2.74 lakh crores. And the FDI is almost in April, July 2021 is at a whopping number of 20.42 billion US dollars. These are initial trends, my dear friends. But will we find the devil in the details? We have to see where the market is heading to. Really, we want to talk about how people behave in a market after a bull run. The history, the fundamentals, the technicals and all. So I request you to stay till the end of the video. We will have 3 episodes of this video. The first one is on today, where we will talk about some of the aspects, and more important, the next 2 days. Kindly subscribe the channel, and you are free to comment on the comment section of the video. This is KARMANTA Research and Analysis, and myself, V. Ramesh Kumar. My dear friends, as I said, mind the technicals. What are those technicals which are related to the stock market? We'll have broadly, we know the EPS, the earnings per share, and then we will have the price earning ratio, the price to book ratio, and the dividend yield ratio. Don't get frightened with all these technical terms. These will be made very simple, because what we need is how these technicals relate to the market. As an investor or as a trader, people are very common people who are trading in the market. How can I study such great fundamentals? Just we will see how this behaves in the market to understand how the market is going to move, whichever way the market is going up or down. And I would like to see how the market behaved in history based on these ratios. What are the optimum levels of these ratios? The bull market, how the ratios behaved, the bear market, how the ratios behaved, and does it mean that the bull market is going to end soon? We will analyze these ratios and find out. And before I go into the tough, what we call the technical ratios, I will have to see 3 fundamental things in this market. The broad fundamental things that affects every share market in the planet. They are, the first one is the sentiments, the second is the liquidity, and the third is growth. Bear in mind all these 3 factors. First of all, let's go with the sentiments. What does the share market and how the sentiments work out? When the bull runs, everybody says, come on, buy, buy, buy. Whichever share you buy, whichever stock you purchase, you are going to see that the stock is moving up. And you don't need the advice of any experts here in the bull market. Normally people listen to their friends, the advertisers. You will see a lot of advertisement, purchase that, purchase your ETF, purchase a mutual fund. All these advisors will come, the fund managers, the advertisement, the newspapers will say the market is going up. Here the sentiments plays a lot. The market will play with your sentiment, and the underlined aspect of the sentiment is nothing but greed. And when the market goes up, people become greedy. And for Indian market, sentiments is very high. And the second important thing is the liquidity factor. How the liquidity factor affects in a market. For that, I will go back to 5 years from now, when an important event in the Indian economic scenario happened, when the note bandi happens, when the notes, high definition notes of 1,000 and 500 were withdrawn. There were many reasons these notes were what we call withdrawn by the Narendra Modi government, and one of the reason which was said that the excess cash circulation in the market. So in India, the cash circulation was so high. The currency circulation depends on the printing of the currency. The currency circulation as on what we call on the day of the notes were withdrawn, it was something around 17 lakh crores, near to 17 lakh crores currencies. But we'll have some staggering figures about this. The currency circulation in India as on May 28, 2021 is 29.63 lakh crores. From the 17 lakh crore when the high definition notes were withdrawn to reduce the currency circulation, it has reached 29.63 lakhs. It was 27 lakhs in January, it was 24 lakhs in March 31, 2020, and in what we call May 2019 it was 21 lakhs. So the purpose of demonetization, one of the purpose of demonetization was nullified when we see this. The liquidity factor has increased in India, which means a lot of funds are moving in India. The liquidity has increased. The constant repo rate cut by the Reserve Bank of India is at the factor. The interest rate, the savings account rates are coming down drastically. It has come down to almost 4.5% at levels. So the what we call the FD maturities, the insurance policy maturities, the property sales, the retirement benefits, people have to park this somewhere. And they have parked over the 5 to 7 years preceding now, they have parked this money in the stock market where they saw some good returns coming in. And even up to the extent when the loans were taken, people think that 9%, 9.5% interest if you get a loan, and if you invest in the stock market, the market says that you are getting something around 30%, 40%. The mutual funds are advising that year on year returns up to 160%, and people started thinking that 9% interest from bank loans if you invest in the stock market where you will get a lot of money. So this liquidity factor is something which is unprecedented, and I'll have to talk about the growth. The growth factor is to be discounted. The market actually discounted the growth factor. The growth is something which we compare year on year. Last year how much, this year how much. This is the way in which growth is calculated. The COVID pandemic actually has taken away all the growth happening in this country. But still we feel that India is growing like anything, but the actual fundamentals of the Indian economy has still not picked up. So the market sentiments is that you have to take 2 out of 3. The sentiments, the liquidity and the growth. If 2 isn't right, the bull market is on. That is a philosophy. And the Indian market has clearly taken up the 2 out of 3, the liquidity factor and the sentiments. And now we will see, I have not forgotten to talk to you about the PE and the PB ratios, the fundamentals, the technical aspects, which the investor and the trader must understand why I should speak this. And it's too much time today. So we will see the PE and the PB and all the dividend yield factors in the next episode. And we will see that in detail how the PE is going to affect, or will the market goes up or come down in the near future. And thank you for watching, and see you in the next episode. Please subscribe the channel if you have not subscribed it. We'll come with detailed analysis of the technicals in the next episode. Please post your comments. Thank you for watching. See you in the next episode. Thank you.